Welcome to a brand new episode of Smart Money. Well, we usher in a brand new Samvat, and with that, with the markets at new highs, today we've decided to get you the best and the brightest mind in the business, someone who's had decades of experience and who has literally sung his way through his investment journey. We get some pearls of wisdom and some investment ideas as well. Joining us now for our investing classroom this week is Vijay Kedia, veteran investor, and of course someone who has a penchant for singing. So it's going to be quite a melodious journey over the next half an hour. Vijay, thanks so much for joining us on the show. This has been a fabulous year as a bull, but you tell us about what the key investment lessons are that one should step into the new Samvat with.
Sonia, message is always the same, whether new Samvat or old Samvat. Always try to stay in the sunrise industry at any cost, and always try to stay out of the sunset industry at any cost. So at any cost does not mean that you can buy at any price. What I mean, like try to hold the shares of sunrise industry at any level, whether there is a crash like March 2020 or there is ups and downs in the market. So the wealth in the market can only be created if you hold the quality stock for long term. And that is the only mantra which I am following in my life.
Okay, so hold quality stocks for long term. You know, Vijay, when we started the promo of this week's episode, we got flooded with queries, especially queries from a lot of millennial and young investors. So I'm going to try and take some of them on board. But one of the biggest query that we generally get is experts tell us when to buy, but they don't tell us when is the right time to exit. So if you've bought into a stock, how do you decide when is the right time to exit that stock?
You mean enter and exit, right?
Yes, yes.
You see, it's very simple. This is the formula actually what I am applying in my all the investments. When focus of the management changes, that is the time to exit a stock. And also when the focus of the management does not change, that is also the time to exit a stock. I will give you one example, like for, say just for an example, a company is manufacturing automobile or a car. Okay, now they are so much focused, but suddenly they feel that they are generating a very good cash flow, and the company is doing very well, and they don't know what to do with their cash, and they suddenly decide to enter into tire manufacturing. Okay, thinking that is also a part of automobile. So there the focus of the management changes. So that is not a good idea. So that is the time to sell a stock. And secondly, when the focus of the management does not change, in the sense like suppose a company is manufacturing some diesel vehicle, and now if they are only focusing on diesel and they're not focusing from diesel to petrol, onto petrol to like alternative fuel like say LPG or CNG and now electric. So if they are not focusing on electric, then also they are going to be out of the business very soon. So this is very important. I can give you one example if you have time.
Sure, go ahead.
Some 10 years back, I had bought some shares. Yeah, okay, thank you. So some 10 years back, I had bought some shares of Jayashree Tea, thinking that it is the second largest tea manufacturing company in India or maybe in the world. I don't know, after McLeod Russell. So that time price was some 300 rupees. And after I bought some shares, so I got to know that the now company wants to buy some sugar mill, and that also in Bihar, which is not a sugarcane belt area, and both are cyclical, right? So it did not go well with me, and I sold my shares. And luckily, after that, share price never came to 300 rupees. Okay. So this is just for an example. This is how one investor should do.
This is a very, very important investment lesson, Vijay. The fact that you shouldn't sort of get into companies where you see heavy diversification or when they get into businesses which are non-core, right? I think that's a very, very important investment lesson. But you also started by telling us that buy quality businesses and hold on to them. So we're getting a lot of queries right now on our Twitter feed. So I'm going to invite put one of our query on board. Shailendra Kulkarni has written to us, and Shailendra, thanks a lot for your query. What should be the strategy if a quality stock rallies? So you said buy a quality stock, but what should I do if a quality stock, say Bajaj Finance, has moved from 1800 to 4700? Should I book profits partially or should I wait for a drop? And what should the holding horizon be for a quality company? Vijay, what would your view be here?
You see, I do not hold Bajaj Finance, so I'm not, I can't speak about, but I will talk about the concept. So there is a saying कि चलती हुई गाड़ी का bonnet नहीं खोलने का, So first of all, if the industry is a sunrise industry, then you shouldn't worry about all these falls, all these ups and downs and rise and falls in the market. And one thing I would also like to tell you, to tell your viewers, then forget about whatever happened in March, March 23rd or whatever, that pandemic thing. This is a one-off thing. If you will keep that thing in your mind, then you won't be able to, invest for long term in the market, because you will be, all your life you will be living in this fear psychosis. So this kind of event, they usually comes once in a decade. If you remember 92 Harshad Mehta scam, so far Indian stock market is concerned, and then in 2000 KP scam broke out, and then 2008 Lehman Brothers broke out, and then now this pandemic. So maybe we will get to see another such kind of event, maybe after 8 years or 10 years or 7 years, we don't know. But as soon as you will come out from that fear thing, you will be better off in investing.
Okay, so I get what you're saying. I mean, this is not a once in a decade, this is a once in a century event, right? A pandemic. I guess it's been a godsend for the bulls as well. If you had bought in the peak of the lockdown, you would have made a lot of money. But Vijay, you always say that along with the art of picking stocks, you need to have the temperament as well. I've seen so many of your quotes where you try and sort of promote being patient, being calm, and advocating a healthy life so that you can create wealth as well. We have a question coming in on our Twitter feed from Anil Raja. He wants to know, how do you manage stress when the Nifty fell to 7,500 in March, and how do you feel about the markets now? I mean, it's very easy to say in hindsight that, forget about the March situation, but at that time, how did you manage the stress?
I will confess on your show that I was really panicked and very much worried. I had many sleepless nights, and I had really thought that my career is over, and whatever stocks I am having in my demat account is like e-waste paper, and life is over. So I just started counting my fixed income, which is enough to survive or to maintain the same lifestyle. So I was in this kind of trauma, let me tell you. But one thing which always maybe yoga and meditation, and one thing and two lines which I remember, which I always remember, and which is very much applicable into stock market, which all of us must have read in our childhood, that mera apna kuch nahi jo kuch hai so tera, tera tujhko saunpte kya lage hai mera. And I truly believe in this, that this is how, and I approach stock market, and I approach whatever demat account or bank account I have little bit. My approach is simple. So this only. So this is what mindset. Later on I recovered, after maybe a month or so. First I thought it's gone, then later on then I came over, and whatever 5% or maybe 7% liquidity I had, which I deployed in the market. So, and I think that even now we are at all-time high. So the basic thing in market is that you have to have a calm and still mind. When market is falling, you shouldn't be worried that much. And when market goes up and you are making money, then also you shouldn't make merry. Yeah. I think that stillness will take you places.
Okay, it's very candid of you actually to admit that you had gone through such a rough time where you thought you've lost everything. I'm sure all of us feel the same, right? The peak of the pandemic did that to all of us. But we are getting some more questions, and I wanted to throw them at you. The index is now at an all-time high. How are you feeling about it, Vijay? Is this a time to be cautious? Is there any fear factor that's creeping in, or do you still believe that this is the time to sort of deploy all your money and ride the wave?
See, I think fear is the, it's a lifestyle disease, you can say, or it goes along with market. It is always there. When it was at 7,500 also, we were fearful. When now at 12,000 also, we are afraid. So I think one need to, write down, and one need to do some soul searching, that whenever, whatever fear you had in your life, 99% of the time that fear did not come true, you know. So that will always be there. So I think this is what actually you know, discipline we are talking in investing. You have to come over your fear. You know, fear actually restricts you. It's your limitation. I know many friends, many of my friends, I will tell you now, they must be having, say, they are well-to-do in life. But when coming to investing, so they would not invest more than maybe say 1,000 shares or 500 shares in one script, okay? Because they have that kind of fear. Oh my God, how can I invest more than 500 shares? So they will be having like 100 shares, 100 kind of shares in their portfolio, like a pan ka dukan. You know, they are selling, they are having everything. You know, so but they cannot create wealth in the market. Okay. So this is what it's like an austerity. You know, you have to win yourself. So that fear you have to win. So this is what happens in the market.
Some very important lessons there. So you're saying you need to conquer that fear, so in order to create large wealth, right? That's a very important thing. The other thing I guess you just said a while back is that buy businesses, stick with them for buy quality businesses, stick with them for the longer term, and don't buy businesses where the promoters are diversifying into too many non-core aspects. All right. So those are a couple of lessons. But let's talk about themes now, because, you know, this is a time where anything and everything is running. There's aviation stocks, hotel stocks, tire stocks, you know, this whole unlock wave is playing out. But if you had to sort of cut through the clutter, step back, what are the big themes that you would bet on in this Samvat?
Yes, see, Sonia, in any given time in every bull market, and mainly after 2003, multiple themes are running in the market. Before 2003, situation was different, and maybe one sector or 2-3 stocks used to, you know, lead the market, maybe because of manipulation or whatever it was. But after 2003, we are seeing that multiple themes are running in the market. 2003 to 8, different 5 themes were, you know, successful. And after that, 14 to 18 also, 19 also, 5-6 themes were, you know, good termed as a good investment in the market. Even 8 to 14, which was not termed as a bull market, was a sideways market or bear market, whatever it is. Then also 5 and 6 themes really made good money, tremendous amount of money for the investors. So it is like even going forward also, I think many themes will play together in one cycle. So it is like something like make your own sandwich, as Subway says that make your own Subway, or IKEA says that make your own furniture or make your own salad. So this is what I think investors should decide on their own theme, you know, because maybe the theme, and it is mainly why I'm saying this, because it depends on where is your, what kind of information you have access to. That is very important. Like I will give you one example, like a friend of mine who has a business of, who is into chemical business, half of his portfolio into chemical companies only, because he understands chemical very well, and he has so many friends in different companies and industries, or keep on updating himself about the news, what is happening in China, what is happening in India, what is happening in Brazil and whatever. So he has very much access to the information. So I think this is what every investor should do instead of following the other investors. Because maybe I will recommend some shares today, and maybe after 2 months I will change my mind and I will not appear on your show, and I will sell my shares. Then ultimately you will stuck with it, right? So choose your own, select your own theme which is suitable to you as per your information, as per your conviction. That is very important. And having said that, I can tell you that right now I may be wrong or right, that nobody knows. I am, you know, investing in technology-based, product-based technology companies.
Okay, product-based technology companies. That's interesting. That's a theme actually I want to develop on. But I'm going to do one thing. I'm going to take a short commercial break. There's lots to learn from veteran investor Vijay Kedia. Very entertaining conversation. Don't go anywhere. We'll be back in a minute. Welcome back, folks. Thanks for staying tuned in to Smart Money on CNBC-TV18. Today, we have a very interesting guest with us. Vijay Kedia, veteran investor, is who we are speaking to. He's giving us some fine investment lessons and actually some life lessons as well on how to sort of approach, have a calm mind, have a patient mind in order to create wealth. Vijay, before the break, you were telling us about the big themes that you're betting on. Of course, you said that one should pick their own theme based on the amount of information they have, their risk appetite, and their own study. Basically, do your own research. But you did mention that you're looking at information technology companies, especially those that are in the product service. Can you just develop that theme for us? I mean, what are the kind of stocks that feature in this space?
Maybe information technology or telecom also. So since it is in public domain, so I can say like, but it's not at all a recommendation because some shares have really gone much high, higher than my cost price. Like I had bought Ramco Systems, that's a product company into IT sector, and another I had bought like Tejas Network, which is a product company in telecom sector. So this is what I like. Accordingly, similarly, one should look around for the companies which are into product. For the simple matter, because I think now the time for earlier 20 years, 20, 30 years were good for the companies which were into service, service as in IT, right? So now I think maybe after the, Majesco actually sold some product company in the US, which I think was sold for 4 times its sales, So I think that has changed the game because now product company in India is still available at maybe 1 time its sales or 1.5 times its sales. And to develop a product company, it takes billions of dollars if it is developed in the USA, where in Indian companies like they are developing those world-class product and maybe crores, so 100 crores or 200, 300 crores. And it takes 5 years, 10 years to mature, to make the product to international level.
Sure.
So I think there are many companies in India which are into product, into IT and technology and telecom and all. So I think now, I wish, maybe wishful thinking that the time will come now.
Okay, I'm sure it will. But we're getting some similar queries. I want to toss this to you. A query that's coming in from Sai Dutt. Sai, thanks for writing into us. He wants to know the themes of stocks to play for a very long term, like 10 to 15 years. Now, I have a query here. Is it even such a market anymore, Vijay, that you pick stocks for 10 to 15 years? Because of this whole digital era, everything is changing so rapidly. So, is it still a time where you can buy a stock and sort of hold it for 10 years, or have things changed?
You see, Sonia, there is a quote of mine which goes like this, that, buy like a bull, sit like a bear, and watch like an eagle. So watch like an eagle means what? Whenever I buy, personally, it is applicable to me, but this is what I am following, that when I buy any shares, I do not have any price target, nor do I have any time target. I don't have anything in my mind that I will sell these shares after 5 years or 6 years or 2 years or 10 years. I don't know. I am holding some shares for like 25 years. So what I'm trying to tell you is that watch like an eagle means what? You should, first conviction should be this, that would you be able to live your life, live your remaining life with that shares or not? This is the first thought comes to my mind. Would I die with this stock or not? I'm having that right of changing my mind or changing my views maybe next day. So that is why I'm saying watch like an eagle. But unless you have a longer term target, you won't be able to buy in a reasonable quantity, and you won't be able to. So that kind of conviction is very important when you buy any shares, that I can live with these shares for a decade. And who tells you can sell your shares after 2 days or 2 years or 5 years whenever things change? As you rightly said, that technology is a difficult sector to understand. You don't know. When this technology will change tomorrow, somebody will disrupt you. You don't know that.
Absolutely.
So this is what investing, that is our job, that is our work, to be on toes every time.
So for these young investors, I mean, for someone like you of course have decades of experience, but for young investors who are sort of just joining in, right? How do you identify themes? I'm getting a query coming in from Dhanraj Diokar, who says, I've just started investing, but how do I identify long-term investments? What is your strategy? Do you have any rule book that you apply, or do you generally just go by your gut feeling?
Yeah, first of all, I will tell you, I am also very young, because a bull is always young. As long as he lives, he dies young. Okay. And secondly, coming to your point, So, and now coming to your point, Sonia, I am following one principle, and the name is SMILE. and S stands for small in size, M stands for medium in experience, and large for large in aspiration, and extra large market potential. So this is what actually you will find the flavor of this smile in all my investments. Usually I'm investing in small cap and mid cap, and usually I don't invest in any company where management is 15 years, does not have an experience of less than 15 years. Generally, that means he must have seen so many ups and downs in its life. So far the company is concerned, and even the economy and India is concerned. So he must have fallen 3-4 times during those 15-20 years, so that he learned a lesson from it. And as I say, large in aspiration, aspiration in the sense, if the promoter will not become a billionaire, we investor will not become a millionaire. So he should have a fire in the belly, constant fire in the belly. It should not happen that if a 200 crore or 300 crore company reaches to a point of say 500 or 700 crore, and the promoter thinks, oh my God, I have really done wonder in my life. Now I don't have to work, for money. So that aspiration should always be there, that I want to become the largest company in India, and after that the third largest in the world, the second largest in the world. That kind of aspiration should be there. Then only shareholder can really create wealth. And the last is extra large market potential. Like suppose a company, it should be it should not be like a crocodile in the pond. It should be like a fish in the ocean. Like suppose a 1,000 crore company, 1,000 crore market potential, and a company is at 500 crore. That means that it is reaching a saturation point. So beyond that point, company cannot grow. So the market potential should be billions of dollars. As I said, technology company, again, I'm not recommending anything, like technology company having 500 crore turnover. What is 500 crore turnover? Tell me, in India, in today technology world, what is 500 crore? 500 crore is nothing.
Absolutely.
So that kind of market potential is there. Yeah. So this is what principle I am following.
It was a pleasure speaking with you. I mean, there's so much to learn, and I don't think half an hour is enough, really. We would have to sort of have 2 or 3 more episodes of Smart Money to understand all your investment lessons. But unfortunately, we've run out of time. Vijay, thank you so much for joining us on the show. It was great speaking to you, and have a great Samvat. I'm sure we'll keep chatting. Thanks for the investment lessons. Well, that's another episode of Smart Money done for the day, for the week. And you guys have a great weekend. We'll be back same time, same place next week. Till then, goodbye.